Welcome to this special episode of CP Newswatch. I'm Dawn Kelly. This Wednesday could mark a pivotal moment for the Canadian economy. With expectations, Bank of Canada Governor Tiff Macklem may cut interest rates for the first time since March of 2020, when the world was thrown into COVID-19 chaos. More than 4 years later, Canada is in a far different place. Inflation soared to levels not seen in decades, and our country's key interest rate followed suit as the central bank worked to cool rising prices. This is the rate that determines how much we're going to pay for our mortgages and how much businesses will pay to borrow money for things like expanding and buying products. Needless to say, economists, would-be homeowners, and people renewing their mortgages are keeping a close eye on this decision after watching the rate climb from 0.25% just 2 years ago to 5% today. On Friday, Statistics Canada reported the economy didn't grow as quickly as was expected in the first quarter, adding to speculation the central bank may cut interest rates. Joining me now from the Canadian Press Ottawa Bureau is reporter Nojoud Al Mallees. Nojoud, what are the expectations for Wednesday's interest rate decision from the Bank of Canada?
Yeah, right now expectations are really leaning towards an interest rate cut, a 0.25 percentage point of a cut. Economists say that, looking at inflation, it has come down a lot over the last couple of years, especially in the last few months, down to 2.7% in April. The economy has slowed. The job market is no longer bustling the way it was post-pandemic. And so those are all signs that interest rates have really worked when it comes to bringing down inflation. And they say that this is now the right time to begin lowering interest rates. Now, not everybody expects that the Bank of Canada will decide to pull the trigger and bring down interest rates on Wednesday. So it's definitely not something that is in the bag and, 100%. But that's where expectations are leaning. If we don't see an interest rate cut on Wednesday, the expectation is that the next interest rate decision in July will bring about an interest rate cut.
There's been so much anticipation brewing for months and months and months now, so there's been a lot of significance attached to this decision. Is that overblown? Is it proportional? How do you see that?
Yeah, well, for over the last 2 years, all we've been talking about is actually interest rate hikes and how high interest rates are. The Bank of Canada began raising interest rates in March 2022. And if you remember, that was in response to inflation really taking off in Canada. And so now we're really at the point where people are feeling like, okay, interest rates can start to come down, and that really signals, a new phase in this fight against inflation. A bit of a pivot for the Bank of Canada, and so people have been really waiting for this moment for a very long time. Particularly those who, have been affected by interest rate hikes, people with mortgages, businesses, and so I do expect Wednesday is going to be one of those days where everybody has their eyeballs on the Bank of Canada, regardless of what it does.
It seems like 0.25 point is a pretty tiny amount. So why should we care about this?
Yeah, I think for people who have been affected by interest rate hikes, I think they're just really waiting for things to head in the other direction. So even though it's just a 0.25 percentage point rate cut, it really signals that interest rates now can start to slowly go down. That's particularly important for those who have variable rate mortgages, who have seen their mortgage payments go up because of the interest going up so much. For people who are, who have to renew their mortgages in the coming months, are really hoping interest rates start falling so that they don't have to renew at such a high rate. And for people who are looking to buy a home, maybe they've held off because of high interest rates. This will signal that, maybe they can start actually looking for a home. So yes, things aren't going to turn in one day. A 0.25 percentage point rate cut will mean we're at 4.75%. That's still very, very high, but it does suggest that we're turning a corner. And when you think about people's economic anxieties in a broader sense, rate cuts will suggest that things are getting better, inflation is coming down, and the Bank of Canada can start acting accordingly.
So that would help people then who are carrying high credit card debt? We've been hearing a lot about that lately.
With credit card debt, it's a little bit different sometimes because interest rates there don't necessarily always move because they are at usually a very high fixed rate. But for people who maybe have other types of loans or are seeking to get other kind of loans, like say a car loan, that will matter. Again, if you're a small business and maybe you want to invest in yourself or broaden out, lowering interest rates will help you be able to move on with investment plans.
What are the political implications of this interest rate decision?
Well, the federal Liberals have really been holding their breath for this moment. If you look at their polling numbers, things really started to head south for them around the time the Bank of Canada started raising interest rates. That's not to say that they're struggling in the polls solely because of interest rates, but it is part of what has fed into economic anxieties in the country, people's frustrations with how the economy is faring, how their own financial situation is faring. And so the Liberals have really been hoping that they could start turning things around once interest rates start falling. I think they know that won't happen overnight, but I think it'll be easier, or they hope it'll be easier for them to come out and sell their economic agenda to Canadians without the backdrop of high interest rates and high inflation. I guess we'll just have to wait and see in the coming months, how lower interest rates will affect people's feelings about the Liberals.
Can you talk a little bit about what the governor of the Bank of Canada and the panel that makes this decision will be looking at? Are they going to talk about what's going on with the U.S. Federal Reserve, the Canadian economy, the global economy? What's all playing into this?
Yeah, well, they're trying to really take a holistic picture of what's happening in the economy and what's affecting inflation. When it comes to price growth specifically, they try to look at these measures called core inflation measures, which kind of strip out the volatile price components. You think gasoline prices can go up and down a lot, and they try to really get a sense of where is inflation headed in the coming months in a longer term sense? And those measures have fallen a lot. They also look at, for example, like what percentage of things in the economy are say rising at a pace of above 3% annually. That gives them a sense of how broad is inflation in the economy. Aside from that, they're really looking at how is the economy faring. They don't want to see really strong economic growth because that could feed into higher prices. They want to see a slowdown in the job market. High wage growth can be a problem for the Bank of Canada because that can then feed into higher prices, or at least, theoretically, if it persists. And so they are taking a holistic look. They are looking at what's happening in the global economy too. That the US and Canadian economies are closely linked. And so obviously there's a relationship there. But again, like I said, they're really focusing on these fundamentals in Canada specifically. And Governor Tiff Macklem has come out and said, things are headed in the right direction.
If we do get a rate cut on Wednesday, what happens next?
Well, the Bank of Canada, Governor Tiff Macklem, has signaled that, even if interest rates start coming down, they're not going to come down as fast as they went up. And so I think the Bank of Canada is really going to take this cautious approach. They want to see what happens after they cut interest rates to the economy, to inflation. They really don't want to reignite things. And so, the expectation is that things will progress slowly. Economists don't expect interest rates to go back to the low levels they were, obviously, after the pandemic, but not even at the levels they were before the pandemic. And the other element is, the Bank of Canada can start cutting interest rates before other central banks, but there is some relationship between interest rates here and, say, in the US or globally. And so, Governor Tiff Macklem recently conceded that, the Bank of Canada can conduct its own monetary policy. Interest rates in Canada can't diverge too much from where they are in the US. And that's because if they do start diverging, it could lead to the Canadian dollar depreciating. And they really want to avoid too much. They want to avoid, current volatility in the Canadian dollar. And so, the expectation is that the bank can cut interest rates maybe once or twice, but it will have an eye on the Federal Reserve and what it does. And so things are going to progress slowly, and they will be somewhat affected by what other central banks do in the coming months with their own interest rates.
So, the rate decision comes down Wednesday morning, Nojoud, but then Governor Tiff Macklem's going to be holding his news conference and speaking to reporters, including you. What are you looking for?
Yeah, everybody's going to have their eyes on what Macklem has to say on Wednesday, whether he cuts interest rates or not. It will be interesting to see if he does cut interest rates, what he says about what Canadians should expect in the coming months. Like I said, interest rates aren't going to come down all of a sudden. And if he doesn't if he doesn't cut interest rates, I think there'll be even more anticipation for this press conference for any sign from the Bank of Canada on when it thinks it will cut interest rates and why it didn't decide to do that on Wednesday. And so lots of anticipation. It'll be really interesting what the governor tells us.
We'll look for you at that news conference. Thanks for your insights, Nojoud.
Thanks for listening. Don't forget to follow and subscribe. For more of today's top stories, visit thecanadianpressnews.ca.